Martin McGrath from Financial Edge Group. We help people get their retirement sorted and often work with clients with more complex situations. That involves having different entities and structures. Today I want to talk about a family trust and whether it's the right thing for you to use or not. It depends upon your circumstances, but I want to explain at least a little bit how does it all fit together and where are some reasons it fits different to other kind of investment structures. There's a bit of complexity around family trust. I won't bore you with all of the ins and outs today, but I want to talk you through a few of the key elements of it. So the family trust or a discretionary trust or an investment trust, often there's lots of different names thrown around, but that's the kind of structure we're talking about. It has two key elements. There are a few more, but trying to simplify it, there's two key elements. It has what's called a trustee, and then it has different beneficiaries. So a trustee is basically who's in control of it. The trustee gets to decide what investments we buy and don't buy, what bills we pay and don't pay, and ultimately the exciting bit is if we make some money or when we make some money, who ends up getting that money? So a trustee is a really important role of a trust because effectively that's the driver. Often that's yourself and your partner together, perhaps separately for different reasons, but the trustee is the person who's the one making the decisions around the investments along the way. What can you invest in inside of a trust? Basically anything you want. We can buy shares, we can buy property, we can run businesses, we can buy overseas assets, etc., etc. There are often some trade-offs. Do we get a land tax threshold? Do we get certain things like that? It depends, and different states are different. So again, pause before we rush out and set up a family trust or investment trust. Another part is to consider the cost. Trust have a cost to set up. There's an ongoing cost that comes with this kind of structure. But often if your circumstances and the finances we're dealing with have got enough going on, we're going to get that money back in spades. Where do they get exciting in my mind is that a trust doesn't pay tax. Now that sounds really exciting, but we need to move past the headline. It's not tax-free. It's a structure where the assets or the profits flow through. They flow through to beneficiaries. So it's not as if there's no tax. If a trust makes $50,000, it doesn't pay any tax on its tax return, but that trust has got to end up in someone's name. Ordinarily, a trust would have individual little people as their beneficiaries. How much tax are they going to pay? It depends. If they're already earning wages, well, they might be at the 30% or 32% tax bracket. Profit on top, they might be paying tax at 39%. If we've got some shares in there, they might get some tax credits and have to pay a bit of top-up tax. The good thing about a trust or a discretionary trust is the beneficiaries, within reason, can change every year. Or at least you can reassign how you want to distribute between beneficiaries each year. It may be in one year that beneficiary number one is not working. Well, let's give a lot of the money to them, or probably all the money to them, because they're going to be the lowest tax rate. They might be close to zero. The next year, beneficiary two might not be working. It might be the other way around. Well, they might have a capital gain on one of their properties, so we want to distribute through to beneficiary two. If we were holding these assets just in joint names, we can't control where the money goes. Whereas with a discretionary trust, we can decide year on year how and where to allocate those funds. At that point, we might bring in beneficiary number three. They might be an adult child that for certain reasons we can distribute to. The HO definitely has an eye on this, so we need to make sure we're documenting things in the right manner and working with an accountant who specialises in this area, and we can put you in touch with one for sure. But again, it might make sense that it's not just in mum and dad's name. This potentially is, as the name suggests, a family trust. It's a trust that can be used for the whole family and distributing funds in various ways to make that happen. Let's say this trust is doing really well. We've now got a couple $1 million in there. It's making good income. And we've sold a share that's made a massive gain, or we've sold a property that's made a massive gain. Let's say there's $1 million of profit that needs to be distributed, or $1 million of income. We might decide that we don't want to be paying 47% tax on that to these individuals because they're already at really high tax brackets. That's where, behind my shoulder, a bucket company can come into the fold. Trust can distribute to other entities. In this case, I'm talking about that entity being a company. I've done a separate video on bucket companies and how they all fit together, but by using a bucket company, we potentially are capping that tax at 30%. So we might decide, hey, there's too much money this year, let's not pay it all at 47%, let's allocate half of that or 500,000 of it over that bucket company to at least cap that tax. Now, we then need to consider how we get it out of the bucket company in the future, and there's strategies around that as well. Those franking credits that the bucket company can pay can flow through and save that. But that kind of planning and having these structures set up are how we make sure that we're paying the right amount of tax every year. We're focusing on the long term, but also taking care of the short term along the way. So there's a bit of an intro about family trusts, how they fit together. Do I think someone with 20 grand, 50,000, 100,000 needs this structure and the cost? Probably not. If I've got one rental property, should I go and set up a family trust or invest it? Probably not. But the clients we're working with have things going on. We've got money invested here, we've got other money sitting there. We're exiting a business, there's money flowing through. We want to make sure we're using the right structures to optimize the situation, but for both not only now, but also into the future. If you want to have a chat, reach out to us at financialedgegroup.com.au. We can take you through some scenarios like this.